Hello and welcome to the June 2024 monthly market update. My name is Steve Latham. I am the Chief Investment Officer for Bernanke Wealth Management, and today we are going to be discussing the 800-pound gorilla in the room, that is the price performance of Nvidia stock, and how is that having an impact on the overall performance of the S&P 500, and what does that mean for the other 499 stocks in the market. So let's dive straight into it. What we see in front of us here is a chart that shows the performance of the S&P 500 index on what is called a cap-weighted basis, which is the traditional indexing of the S&P 500. That's in the purple line against the equally weighted S&P 500 index in the orange line. And this is the performance so far this year in 2024. Now, what do I mean when I say equally weighted? Well, of the 500 stocks in the equally weighted index, all of those stocks are going to get the exact same representation of performance within that index. That's in contrast to the traditional S&P 500 index that we see quoted every day, where the largest stock in the index garners the largest weight, which means that if you're a big stock and you're performing very well, like Nvidia, you're going to experience a lot more of that performance within the index compared to the equally weighted product. And we see that right here in front of us. Nvidia, as of today, is up more than 150% so far in 2024. It is now the second largest company in the world, right on the coattails of Microsoft. It just surpassed Apple's market cap valuation earlier this week. And we've seen that here in the performance. So far year to date, the S&P 500 is up 11.3%, while the equally weighted S&P 500 is only up 5.49%. And that's because Nvidia is a significantly lower weight in the equally weighted product. Now we can see that even more in the total return to the S&P 500. So if we're talking about how much is that S&P 500 return being impacted by the performance of Nvidia? That's what we're seeing right here. So far, year to date, we have the overall performance of the S&P 500 up 11.44%. Over the last month, it's up 3.23%. Well, let's take a look at how that has been impacted by the other larger stocks in that index. Well, Nvidia represents 2.87% of the total year-to-date performance and 1.15% of the last month's performance. That's an astounding amount when you put it in terms of how other large companies have done. Alphabet, the parent company of Google, has only contributed 0.8%. Microsoft, 0.64%. Amazon, 0.56%, and Apple, again, the third largest stock in the globe, barely contributed at 0.06%. Now, what does that look like relative to the overall S&P 500? Well, putting it into the chart here, we see that year to date, Nvidia has accounted for 25% of the total return of the S&P 500. You have to go all the way back to the dot-com bubble of 2000, 2001 to find anything even close to this type of performance for a market cap weighted strategy. If you look at the other companies' contributions to the S&P 500 returns, again, Alphabet only represents 7% of that, Microsoft 6%, and Apple basically 0%. And again, if you're looking at it just over the last month, Nvidia's proportional weight to that total return is even greater. 32% total of the last month's performance is attributable to Nvidia. So really, what does this mean? Well, if you haven't owned Nvidia in your portfolio so far this year, it means you have struggled keeping up with the index. If you are looking at it on an equally weighted basis, most individuals who own those equally weighted portfolios are actually doing relatively well. However, Nvidia has just grown so large and become such a sizable portion of the overall economy, especially whenever you talk about artificial intelligence, that it's difficult to ignore the price performance, especially whenever it contributes this much to the S&P 500. Do we think that's going to continue? Well, it's sure hard to say. We don't know how long this AI boom will continue. There appears to be some cracks forming in the periphery, but it's very hard to determine when a bubble, if it is a bubble, would burst. So right now we're continuing to monitor the situation, see what other portfolio names could be attributable to the overall performance of the index, and see what our opportunities look like for the remainder of 2024 and going into 2025. If you have any other questions about the performance of the market or anything else going on in the economy, please don't hesitate to reach out. We'd love to answer your questions for you. Thank you.